Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, February 6th, 2017. And this is brought to you by Triton Wave Consulting. Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. And your necessary disclaimer. Okay, before we take a look at the ES, I want to congratulate New England Patriots fans. That was a fantastic come from behind win. I wish all of our market losses came back as quickly as that did. That was truly extraordinary. Okay, let's look at the ES on the daily. It looks like it's maintaining an upward bias. Just for a review, for those people who are strangers to this, these are Triton waves that come in 4 pairs. This is 1 pair, 2 pairs, 3 pairs, and 4 pairs. And sometimes there's a third wave in there that I add. These are shorter term, medium, a little bit longer, and anchor waves on the bottom. These lines up here are, I call this the minor wave. This is the major wave, and on some of the charts with different longer term algorithms, I have an orange wave down in here that I call the maverick wave, and it's just like a maverick wave in the ocean. You don't want to go against it. So let's start with a review of what happened last week, and let's just take a picture of the last few days, which was right about here. We started and ended right around the same level. So it looked like it was going to die. It stayed on the 21 EMA and then bounced off of it dramatically on Friday with the news and no interest rate changes a couple days before, and it doesn't look bad. But this is my concern here, and this is why I'm going to be cautious until, hang on one second. I'm going to be cautious until there's some kind of correction, and I'll tell you why. This is my experience with the waves that I've seen. You can pull this all the way back to non-confirmations. When this series of higher highs and this series of higher highs were not confirmed by wave number 1. Now you can basically, for these non-confirmations, I just use this first wave. The same thing happens with here and this lower wave, and then this happens. And these are fairly substantial moves. For this one, it started off down about, well, that was 100 points down, 100 points up, and then 200 points down, and then, well, that was 2008, so that's a different look. But even when we have this here, this non-confirmation, yet we had a higher high in the price, and if we stretch this out, because that's all squashed in there, even though this looks like a nice correction and it does go much higher, you don't want to get stuck buying the top, because this actually was 1474 on September 26, 2012 with this non-confirmation. Now on a shorter time frame charts, these are gonna cut right through like a knife right at the top of these. But these are your heads up warning here. So this is 14, what did he say? 1470 high, about 1467 high and then 30 days later, no, not even that. Let me see. 10, 9, let me stretch this out. I'm having a hard time saying this. Let's get this a little more accurate here. Okay, right around October 5th, it was at 14. Let's call it 1455. November 13th. So 3.5 weeks later, 4 weeks later, we're looking at 1337. So even though it went much higher than that, and it's continued to go higher, obviously, for a long time, you don't want to be sitting on a let me see, 1460 down to 13 on 120 point loss in your hands, whether you're owning stock, whether you're owning futures, it doesn't matter what it is. So that's why timing is so important here. But this is what I see. This is, let me get this back into auto scale. Okay, so this is what I'm seeing on the daily. I see the same kind of pattern forming when this is going up into a high right here, and this is going up into a higher high, and besides being a higher high, it is a 1618. It's a 1618 extension from the November. Whoops, not even November. August 2016 down to that. That's the November lows just before the election and back up. That 1618 extension is very high. And let me also add something here that I have been looking at lately. Let me add a fib timeline that starts right here and goes to the first, let me see. Alright, let me just extend this a little bit so you can see it. Okay, so that timeline starts right where I'm going to put this arrow right here. That's where that timeline starts. Okay, so we go out and we get, this is one extension from the bottom of February 2016 to June 27th, 16. Perfectly coincides with the bottom here on the number 2. So this is 100% extension in time, and that happens right at election day. This happens, so if it's going to happen 2 times, nature does everything in 3s, and we all make mistakes in 3s or think bad things happen in 3s. So I'm a big fan of watch out when number 3 comes along, because I don't know where it's going, but I do know that this first line is a 50% move between this low and this low, and that was a peak. This was a 50% move between this trough, and that happened right here. This is a 50% move between 2 and 3 here, between 2 and supposed 3. So we are extended past that because this is not a peak as they were before, and this is 2270 here, and it's already gone up to 2300. But if this third peak holds and the trough happens here, the trough it's going to start unraveling very shortly, and I see the bottom happening around March 29th, 2017. So that's just something to keep in mind, and that's why when I'm looking at directions on a very, very short-term chart, you know, like a 55 volume or a 144 volume like that, you can go up and down all day long for 1 or 2 points. Just keep in mind, in the bigger picture, that this is a sign of caution to me. Okay, I'm going to erase this here. I'm going to erase all these here. And let's just look at a little bit smaller time frame, the 144. Let me see what I want here. Okay, hang on 1 second. All right, so here's the 144. Now I changed the algorithms around a little bit because I have like a slower moving algorithm on the daily one. This is the one that shows the Maverick wave. So you can see all of them here. This is the minor, this is the major, this is the Maverick, the 3M waves. Okay, so they're all on top of each other, and they all cross nicely, and they're in an uptrend on the 144. These are the same moves that I showed you on the daily chart that went from this leap to this leap, which are almost identical to the day, and that puts you out to March to the end of March for a bottom. And the 144 minute is already showing a breakdown on the first set of waves. So we can let's just keep refining this a little bit more and a little bit more, and we'll show you some plays. But this is just an overall bigger picture. I think we've been down 400 tonight and up 200. We're all absolutely flat neutral at 22 at 22.91. And right now it's just before midnight Central Time on Sunday. So okay, this is the first wave is a little bit wishy-washy, so I'm not paying attention to it. The second wave actually looks like the 144. It's just like a differential smaller. So this is the last 7 days since my last videos. This is the 987V. Okay, so some of you have asked what's the difference between the tick and the volume when you're looking at the ES. And the tick chart you need, if you're using a 987 tick chart, then you need 987 trades before one of these move, even before one candle is established. With the 987 volume, you need 987 contracts to trade before you get a candle. So you may get a whole series of these that are starting, which more or less gives you a heads up of if there's things going on in Europe overnight and there's all of a sudden a lot of volume rushing into it. It gives you a heads up more than a tick chart would. In terms of timing, the 987 volume is 5 times more populated than the 987 tick chart. That's how much volume is involved. But it also gives you more accurate readings. So this is what happened last week. This is like the last 7 days. So it's like 7 days of trading. What I'm going to do is put in the session bar so you can see what happens. This is like Monday, Tuesday, Wednesday, Thursday, Friday, and this is what's happening right here, right now. So these were some of the trade opportunities. They were really cut and dry, very simple. The first wave worked out very well for a lot of these. None of the other waves really did anything. So I look at the wave that's most appropriate. It's kind of like standing at the ocean with a surfboard. You're not going to take every wave. You're going to take the wave that looks good. You're going to take the wave that feels good. And that's the one that you're not going to break your neck on. Okay, so basically summarizing the ES, you notice that on if you remember the daily and the 144, the daily is giving me non-conformations, the 144 is giving me crossovers, the 55 is giving me crossovers on wave number 2, and the 987 on wave number 1 and number 2 are starting to cross over here. This happened at 2:30 on Friday afternoon. Right now it came down, it started off a couple points up, and then it slammed right absolutely. I mean, you can see. Whoops, okay, let's see if we can nail this. So that was almost exactly dead on the major wave right here in the chart. How's that for a target? And then when it bounced up, hit the minor one. That's perfect. So I don't know what it's going to do from here. I'm watching it. I tend not to get in when these are already crossed, unless now if this minor wave had already crossed the major one, and they were heading down, and this were down below this, and then this came down and bounced up to here, this would be a sell. Right now, I'm a little bit cautious. I need a little bit more evidence. So let's move on to the 30-year bonds. Okay, so last week we discussed my super cautiousness about the 30 years, about the 30-year bonds. Starting from 9/28/16, got a sell signal on wave number 1. Then soon afterwards on 10/10, wave number 2. On 11/8, wave number 3. And the anchor wave is starting to go below zero. Just happened this week on 1/27, and so let's take a look at this now that you know now that you know what these waves mean. Came down all the way from here. Once it crosses this minor wave, the tendency is to seek the lower wave. Okay, so this wasn't not even a 50% retracement before it slammed right into this 55 here several times, came down here like a monster, 153.29 to 149, and then is kind of like fluttering back and forth and back and forth. So I like this to the downside. Doesn't mean it can't jackknife up and take you out for a couple points. That's why timing is very, very important. This is a daily chart here. So even though this is moving down, this could well go up 2 or 3 points. All right, let me see what else I got here. Let me just move this out of the way, and we'll just fit right into the 55 here. This is a 55 tick chart, and this is 1, 2, 3, 4, 5. Okay, so just to give you an idea, on a 50, this is a 55 tick chart of the last 5 trading days since last week, to give you an idea of how this looks on a bigger. Now you can see wonderful entrances just on this first wave. In here for 50 to 51, and then this is like 50.26 to 49.26. Just beautiful, beautiful moves all week long. Just extraordinary moves. Okay, but on a larger chart, I just want to show you how small this looks. If you have your eyes set on a 55-minute chart, that's what a 55-minute chart looks like. So if you're playing a 55-minute, and you're wondering why it's not happening, why when something crosses over on one of the charts that you're using or some indicator, it's because you're using a much too larger time frame. So let's go back to the 55 tick. And if you're looking for small moves, use a small chart. It's kind of simple. Let's go back to the 5 days here. 5 days. Okay, so just sweet, sweet moves all day long. This is a, wait a minute, that was a 55 tick. All right, let me see what a 55, let me move this in a little bit so you can see it. Shrink this down a little bit, move this up here. Okay, so the chart that I'm moving around is a 55 volume chart, which again, the 55 volume compared to the 55 tick is about 5 times faster. So you're going to see 5 times more stuff on a chart going across. You know, like you've got this little wedge here, goes all the way out to here. And you can see there are more moves. And yes, these are playable, but you've got to be sitting in front of a machine all day long. And even though I look at it, I don't play them. They're kind of fun to watch, though. It's like watching, it's like, you know, skipping stones in a pond. They're fun to watch, but you can't do it all day long. But I get my cues from the little bit longer chart, like the 55. So you can see this move that happened that actually does not, this turn does not show up on the 55. But it does show on the 55 tick. But it does show up if we ignore this because there are too many above and below zeros, it does show up on the 55 volume chart right here, beautifully at 3:58. I'm sorry, 13:58, which would be 1:58 on Friday. Was it Friday? Thursday? What's today? Is it Monday yet? Okay, Friday. So that was a nice turn here. That was a nice time to take out your profits and just wait to see what happened over the weekend. So that's all I have for right now, and I will keep you updated and have great trading, and I will see you at the next update. Again, this is brought to you by Triton Wave Consulting. I am Rodney at TritonWaveGuy.com if you want to get in touch with me, if you want to become a subscriber. That will include 3 videos a week, shorter ones during the week, much shorter ones during the week, and text messages for anytime I see anything coming along. I specialize in bonds and the yes, and have great trading, and I will see you at the next update.